Welcome to Momentum Monday. Today is April 24th, 2022. Happy Orthodox Easter to everyone celebrating. Howard,
Hey,
what's
buddy.
going on?
I'm in London. I'm heading to the Bahamas for a crypto conference. Just finished being in Spain for the first time in Mallorca. Have you ever been?
No, to Mallorca never, but I'll go next time.
I think you would like it.
Yeah, I mean, do you consider buying a house there?
No, I'm not rich, but I don't know. The world that we live in, you can stay at a hotel. You gotta own stuff. It's
No, I
millennials
mean,
don't.
houses there are still a lot cheaper than Coronado, so I'm sure you
Yeah,
can afford it.
yeah, it's hard to get there. I'm not. I'm old. I'm in selling things, not buying things. Speaking of selling
You're
things,
investing, yeah.
people are selling things.
Yeah, the selling has been definitely accelerating and definitely not attracting, but basically impacting more sectors. In the past few days of last week, we saw a pretty significant spike in correlations between stocks. Before that, usually anything inflation related, commodity related stocks have been going up. And now in the past few days, that changed. And then we saw a pretty widespread sell-off that impacted everything. I mean, anything that kind of held well, like copper and oil related. Obviously, they're still in an uptrend. I mean, they can just pull back to the rising 50 or 100-day and bounce. What I'm saying is that for the first time in a while, at least this year, we're seeing everything selling off, including commodities, fertilizers, oil, gas, coal, everything pulled back in the past couple of days, which typically happens when we have a widespread liquidation. Institutions are selling. And if let me pull up a chart of the Nasdaq 100. Typically, this year we saw a sell-off in the 2 weeks preceding the FOMC meeting, like here, January 25, 26, that pullback before the FOMC and then a bounce. Then we had the same thing in mid-March, a pullback in the 2 weeks preceding the FOMC meeting, then a bounce. And now we're seeing again a pullback. The next FOMC is May 3rd and 4th. So I wonder if we see something similar. The other thing that is standing out so far since the earnings season just began is that the companies that are beating earning estimates and surprising to the upside, they're not really getting a favorable market reaction. I mean, Tesla is a good recent example. They definitely had a record quarter. They continue to grow earnings more than 250% quarter over quarter. Sales are solid. Their cash levels are solid. But as you can see, the market reaction was basically non-existent. There was a gap and that was faded. And this is what's happening to the strongest earnings report, basically a very little gap and a fade. If you happen to, miss estimates or just give us soft guidance, then you're getting absolutely crushed in this market. I mean, Netflix, I guess, is an extreme example, but a good one. And it's not the only one, though, because last week we saw iSurgical.
And this has been a strong sector, IHI, which I own, which is medical devices. I
But
mean,
look the way they're acting. Like they gap down, they open.
And the biotechs took out the lows, so it's just the risk is off.
Near potential previous support, and then there's a sell-off. Like in a typical bull market, you would see a stock like this that beats estimates would gap up here near 370 and then would just continue higher. This time we're seeing the opposite. They gap down below support and then they can continue lower. And there are quite a few names, and the earnings season hasn't really started yet, and we're already seeing that that selling in quite a few sectors. I guess the silver lining on the long side were airlines, which are optimistic despite high fuel prices. And as we talked about last week, travel stocks are still kind of holding well since the market is pricing in people willingness, desire to travel more this year. If it's going to happen, we don't know. It remains to be seen. What are you seeing?
Well, it's a good roundup. I mean, I've been spending my time on a bike thinking about things, right? I've been high cash myself, but yeah, I
Did you
own the
enjoy
stocks.
the strong US dollar while in Europe?
You really do. It's just embarrassingly cheap to live well if you're wealthy American in Europe right now. Um, but like you said, people are traveling, things are busy. Um, Europe is not the same as the US in so many ways, so it's hard to get a feel. But going like, let's look at Netflix, for example. And I started writing about this last week. The stock's not going back to 700, maybe ever, but I'm super bullish. Um, t- uh, Again, I don't know. It's trading at 3 times sales. Charlie B commented that back in 2011 it traded at 1 time sales. Yeah, Netflix and spills. So it's not cheap, but again, it's a lot. We're closer to a bottom when the best brands. And I'm not saying it's the best brand. I'm just saying this is a great company, and none of us know if rates are going to go double from here. But betting against Netflix after a 70% decline, a lot of hedge funds have to sell it now. All the growth funds are dumping it. It's not going to turn around overnight, but Reed's not quitting. The long tail, I'll give you an example of why I think Netflix is an incredible opportunity, 7-year-old prices. His sales, I don't know, are up 400-500% over that period. But more importantly, the long tail. So I'm riding with some guys from Italy who I trust, and they tell me they're talking soccer all week. And I don't know any of the names of the people. These are famous, legendary soccer players. And I'm like, and they're talking Formula One and soccer, and I'm not into any of those. But there's so many documentaries about the best Formula One racers and soccer players on Netflix that you can get caught up in like part of culture. And so it's this long tail of content that there's some opportunities that are surfacing, and it's not technical based. They're not valuation based right now, but these are what I call the 8 to 80 brands, that when these things start basing down here, down 70-80%, and start going up the other way, you're going to catch some great trends. Now we need interest rates, we need government to like show up to work. They need to have policy that shows that they're committed to growth. And we don't have that right now. They're behind the curve. The Fed promised that they would print money. Sorry, they promised that they would watch inflation, and they didn't. Or they thought, and so the one job they had is a disaster. It took forever for it to show itself. And so it's going to take time because no one knows where rates will go. The 2-year yield is over 2%, so it's like a 500% gain just this year. So none of this stuff and the unintended consequences of rates shooting up like this, and mortgage rates, I think, are up, back at 2010 levels. So there's stuff in the system that I would say that are unintended consequences that are now going to take a lot of time. And if you think you're going to get rich owning Alcoa or coal after they've gone up 800-900%, I think these can go in trends for another couple of years or 3 years. I don't know how long the cycle goes, but eventually supply will solve these, and eventually tech will solve for whatever high prices don't solve for in themselves, right? So high prices are going to solve some of the supply issue because people will bring stuff online, and then tech, we're not there yet with batteries, and so it's going to solve the rest. So I'd be careful about chasing commodities. The time to buy commodities was in the last 2 years, and maybe not Friday. So at least there's some opportunities coming. But at the same time, short term, NASDAQ, semiconductors, the stuff that I want to go shopping in is a mess and on the verge of getting really ugly. And the good news is Google, Shopify, the leaders are getting shot right now. And there's no reason for me to rush in to add exposure again. That's the way I'm thinking about it, is I've got my exposure and I got to pick some levels. And the levels that I buy next time, and maybe after 6 months when we start going up again. Right now, it's preservation of capital. I imagine you're seeing short setups galore as a swing trader.
Yeah, I mean, it's been mostly on the short side that is working. The long side, as I said, unless you're like an intraday scalper, like there's nothing really on the swing side that really has been working.
I try and imagine what you're doing, and I don't have to call you. I just imagine you're licking your chops doing short swings, and you're probably scalping. You're not like in it for hundreds of points, but probably the edge is to the downside, I would imagine, for a good swing trader like yourself.
Yeah, for swing trading, definitely on the short side. For anything on the long
I
side,
have no chance as a growth. As a growth investor, we need swing traders in the market, and we need swing traders to get all leaned in and horny and see 100% setups and have long hit, hit after hit. You're just getting going. Like you're just starting to probably see short setups over the last few weeks.
Yeah, I mean, an increasing number of short setups, yes. And next week is probably one of the biggest earnings weeks. So the next
you got Microsoft. Who else?
All the big tech except Nvidia reports this week.
Yeah.
I think Nvidia is the next week. So the next 2 weeks, basically most companies report. So to me, it'll be really interesting to see if most of those companies, just like Netflix, they decide just to give away this quarter and just reset things, reset expectations, because that's exactly what Netflix did.
Yeah. And then I would pull up cryptos. Like, so I'm going to the big, like, this is like the Woodstock of crypto. All of a sudden, FTX is having their event. That's never bullish for when the big dog has a big event and it's the must-get ticket. Generally not good for the industry.
Let's take a look at Coinbase.
Yeah, and you can see it in Coinbase. So, and I own Coinbase as a directional play on losing money at the moment, but like a directional play on me giving back all my money to the short sellers. But you can't right now. Growth is under immense selling pressure, and crypto is a growth category that needs this cheap money to continue to play out, because the products that are worth 10 billion are not worth 10 billion, and eventually people want to cash out of the system, and that'll come sooner than later based on valuations. And so I'm kind of short term. Hopefully I'm wrong, but when there's this much hype around a category and the markets are weak, I don't think we've got the conditions for a great bounce. But I hope I'm wrong. I'm not short, but I feel like there's still a lot of froth around the edges, and so we'll see. How are you right now? 100% cash or just leaning short?
Yeah, 100% cash and just mostly intraday, taking some intraday trades, just focusing on preserving capital and just taking some quick hits here and there.
Is working? Like McDonald's, which I own, is holding up, but that won't last.
Well, on the short side, everything is working.
I'm saying on the long side.
On the long side, last week, the only thing that was working is travel. Like we mentioned them, like car rental companies, airlines. That's what's working.
Coming up on the summer, everybody's got credits and been saving for a getaway. So wow, Avis, it's a 300% move.
Yeah, I mean,
listen, there's opportunity out there.
We talked about it last week. Travel is definitely one of the themes, but like the major theme is that correlations are rising and we're seeing a sell-off in everything right now.
When correlations rise, it's bad, but it's also good because we're getting closer to some kind of
Yes, we're getting close, but it'll get worse.
Before that, it could get a lot worse. Those those last 4, 5, 8% moves in the indexes can be astonishingly damaging if you're in too early. And I've seen that with owning Netflix. Eventually they'll come for Apple.
So is Netflix still your 8 to 80 brand? Or?
Yes, but I haven't
Okay.
added into this.
What about Lulu? What do you think about Lulu here?
Lulu, I long time got rid of just because of competition, but they're still the giant.
They're making some changes, I heard. Like they just introduced running shoes for women only, like a few weeks ago.
Yeah.
They
No.
had good earnings.
I mean, this sideways 2-year move after this great trend is bullish, right? Like the stocks can't. I mean, they continue to. They've made a mistake, like I said, I believe, around the mirror and hardware. They go back to fashion. They've got the young people. They can continue to protect their price point. As I continue to say, as an older person, I just would rather go to the higher priced competitors where no traffic and a little more fashion forward. And so they're getting attacked from all angles, but Lulu's just done such a great job of defending their core customer. And their pants for men are just so popular. Do you wear the Lulu?
Yeah, I have a few items. I mean, I don't remember the last time I bought one, but probably been
they last a long
so.
time. The material lasts a long time, so that's part of the issue. But anyway, it's a great company. I don't own it. I own Nike. I own McDonald's. But nothing looks great. I mean, listen, you can never have enough cash, but I try and stay invested with the money that I actually have invested. I try not to time around the edges. And but I'm not thrilled about what I'm seeing technically. All right, so I'm back in the States finally next week. Have a great week, Ivan.
All right, you too, Howard.
Okay, guys.